What's up, guys? I'm back again, and today we're going to talk about what 5 questions you should ask yourself before you invest in anything. All right, before I go into this topic, I'm not a financial advisor. I'm just some guy off of YouTube, and please stay tuned and like and subscribe to my videos. Now, the first questions you need to ask yourself is, am I comfortable with that risk level at for the investment? So what I mean by risk level, and also don't forget, can I afford to lose this investment? So if you can't afford to lose your money in an investment, you shouldn't be investing your money. If you are very at low risk tolerance, you need to pick something that is low risk. Something like low risk in stocks and bonds, you have to look it up, and there's a chart, and there's a low risk stock like Coca-Cola that doesn't have very good growth, but it's a nice, consistent, safe stock. Now, your investment goal is something you need to take into account for your comfort level, because longer period of time you have towards your investment goals, meaning you have 30 years. You can take more risk in the earlier years to make some mistakes, but if you're closer to your retirement or you're closer to your non-working ages, that means you can't take as much risk. So you can't have high risk factor. And you have to diversify your portfolio, because if you diversify your portfolio, you won't take as much risk, and that's pretty much how it works. Now, the fifth part of that little section is you have to make sure you ask for advice, either professional advice or look it up and do your own research, but you have to look things up. You cannot do anything. Now, whenever you think, am I comfortable with this level of risk? It's telling you, am I willing to risk $500 investing in Tesla this month? And and my financially secure to do it? Because this is an investment. You shouldn't be risking any money you need to live off of. So, am I comfortable? Can I afford it? These are things you need to think about. Now, the next question you need to tell yourself is, do I understand the investment? And could I get my money back easy? Why do you need to know this? So, understanding the investment is, you need to know stock, bonds, real estate, whatever you invest in. It doesn't matter what you invest in. It's whatever you invest in. So if you're investing in real estate, you need to know how easy it is to get your money back in real estate. It is not easy getting your money back in real estate. If you're trying to sell your property to get your money back, or you trying to leverage it, it takes a period of time. Stocks, if you sell your stocks, some bank accounts won't let you take your money back for 7 14 days, some even longer. Let's And if you even talk about crypto, you might not even be able to get back. So those type of investment, you don't know. So you need to understand that. And you also know what are the fees whenever and cost. So when you understand your investment, the fees cost is a factor. Like cryptocurrency. The issue with crypto is that crypto, you have so much fees and transfer fees, wallet fees, and sometimes you may not be able to get your money back. And sometimes the fees are more than what you earned. So please understand, when you transfer your money around, it does cost money in crypto. And then your time horizon is a big factor. So when you understand your investment, you understand, hey, what is it? Is it a stock, bond, real estate, etc.? What's the risk and return on this? So if it has a high risk, you should get a high return. If it has low returns and high risk, it's not worth investing in. The fees and costs when you have these accounts, they have these accounts. And the time horizons, is it, are you waiting 5 years, 10 years, 1 month? What are you doing? Especially in real estate when you're flipping houses. If you're flipping houses and you're trying to go through the motion, some of these houses, some of these markets might be crashing, some of them might be doing good. You don't know. Now, the liquidation part of this is very important. So, is it easy to liquidate? So, liquidation of stocks and bonds is generally pretty easy. But the problem is you might need the money in 24 hours, but you can't get your money back in 24 hours because you have to wait a time period. You have to understand. And then you also have to understand the withdrawal limits. If you don't know the withdrawal limits of the restriction, you don't know what is going to be required. So you need to understand this before you invest into it. And then the market condition of the investment is the third part of liquidation. And the market condition matters because you don't want to always sell on a downturn. You don't want to lose money, but that depends on you and how you invest. The market condition in real estate is normally always going up, but it does have some crashes throughout the years, but it generally recovers. You don't want to try to liquidate during those crashes, so you have to find a way to leverage your money or pick an investment that you can afford to wait on. That's the issue. You don't want to lose 20, 30,000 when you sell a house. You want to sit on it another year and wait for the market to recover and make 40, 50,000 because usually when it recovers, you are able to make pretty good money. Now, the next question is how regularly are you investing in these portfolios? Like real estate, how much money are you putting aside every month to buy another real estate property, or even better, to pay off your rental Airbnb property? Because if you owe nothing to those rental properties, it's all back in your pocket and it's rental income into your pocket. And it's a great deal if you can double the payment because the other payment is coming from the renter. And then you add your own payment that doubles it. So you're able to pay off the principal down faster. You'll be able to make more money. So understand that. How regularly are you investing in stocks? Because that matters. Because if you regularly invest in the market, you can average cost in, and that has the best returns on average that research has shown. Now, the next one is your investment secure? So, is your investment secure with SIPC, FDIC? Is your house insured? Is your brokerage account safe? Has the 401k provider about to go out of business? These all matters because wherever your 401k is at is going to affect you because you might have to find proper channel to get your money out of the 401k because if it's in a provider, they have the rights over it. That's why when you leave a company, you have to take your 401k because they can lose your 401k in a bankruptcy. And that would suck, but you can get your money back through insurance, trust, and everything else, but it is issues and concerns you don't want to deal with. You don't want to deal with brokerage firm buyouts. That's why I don't like going to small brokerage firm because if they get a buyout, then I have to chase my money around. Think about it like this. If every 6 months your mortgage switched to another company, and then you have to track that company down to pay your bill every 6 months, how would you feel? It doesn't feel that great. It gives you a headache, and it's not the best idea. And then you want to make sure the regulatory of those are properly secure. Like, is it U.S. secure or SEC secure? because to be honest, it might be a pain in the butt, but at least we have some sort of regulation in the United States to make sure that these companies are doing properly. You don't want to go through the process to deal with all that headache. So you need to make sure your investment's properly protected. If it's in stocks, bonds, and a bank account, you want to make sure it's FDIC secure. You want to make sure it's SIP secure, because those are safety nets for you to get your money back if something happens. Now, regulatory is a pain, so you just want to make sure you have some sort of regulatory. I don't like crypto because it's not regulated. Why I don't like it? Because it seems like a pyramid scam to me. Now, some people might hate it, but to be honest, it seems like it because there is a bunch of YouTubers, bunch of influencers make their own coins, sold it, and then took the money and ran. There's a bunch of people that did that. So if since it's not regulated, and a bunch of people came with scams, I didn't do it because I didn't trust us. I went in about $10,000-$20,000, and I didn't make much money off of it. After the fees and everything, I pretty much broke even. So just make sure you understand what protection is in place for you, because the protection matters on your accounts. The protection matters on your investments. Same thing with real estate. Now, the last question of what you should ask yourself is, should I get advice financial advisor? The short question is, it depends on how much effort you want to put in. If you want to put zero effort, that means you need to get financial advice, financial advisors, and everything, and that comes at a fee. Not all of them are, not all of them are charge a lot. Not all of them might not charge a fee, counting on your institution and what provider your 401k has. So if you have a major life event, you want to consider talking to your significant other and a financial advisor what you want to do. If your lack of experience, you need to talk to a financial advisor. And if you want to develop a strategy for yourself, you want to talk to a financial advisor. Because if you don't know anything, you need to seek professional help. Why? Because you won't go and play football in a professional level if you aren't a professional player. And that's what happens if you go and try to trade stocks. You're going against people who are all playing these stocks all day, all night. And what are you going to do? You're not going to beat them. And you're trying to day trade. I haven't met many new successful day traders. Most of them lose thousands of dollars on this day trading because they don't seek financial advice. Once they come talk to me, I say, hey man, you don't spend enough time looking at the stock market. You look at it once a week and you're trying to day trade. Well, your time doesn't match. Day trading is every day and keeping track of your stocks, and the other one is weekly. So how does that make sense? So if you're going to pick a strategy, make sure it matches with your lifestyle. So those are the 5 questions you should ask yourself. Please like and subscribe to my videos, and stay tuned for another one.